Good morning, traders. It is the 18th of March, 2016. Happy Friday. It is quad witching Friday today. Um, all U.S. index futures for March expire in about a half hour. So if you're in positions you don't want to get called on or hold, it's time to get out. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overall picture from the overnight session, the overall market sentiment is bullish. Oil making historic moves here, trading at 42.31 on the May 2016 contract, up 62 cents or a dollar, 1.5%. The European markets are also fairly strong. The rest are stronger but flat-ish, just slightly stronger. Gold is down $13.5, $13.5, or 1%. The euro's down 0.32%, or 36 pips. And the Japanese yen is pretty much flat, down slightly, 0.08%. So it looks like the overall market sentiment is still bullish from yesterday. As far as what's driving this, I think we're still dealing with the euphoria of the FOMC backing off. Also, this morning, strong home prices in China. The Financial Times also reports that hedge funds are shutting down at the fastest pace since the financial crisis. Interesting timing on that article from the Financial Times. There seems to be a lot going on with funds going out of the business. I'm sure you've heard of Ackman, um, Pershing Square Capital being down 25% or more, and he's a top performer. The Dow is set to make to make a record here. The Dow is set to make its strongest quarterly comeback since 1933. Strongest quarterly comeback since 1933. If it continues higher into the end of the month here. So big move up clearly over the last few days, a couple weeks. Looking ahead at today, um, we've got University of Michigan preliminary at 9 o'clock Central, 10 Eastern, expecting 92.2. This is a fairly high tier number. We tend to move on this. The previous reading was 91.7, so this is a zero point 0.5 higher. Uh, Beyond that, we have 12 o'clock Central, 1 Eastern, Baker Hughes rig count. And Fed's Speaker Dudley speaking currently. We have Fed's Rosengren at 10 Central, and we have Fed's Bullard at 2 Central. Keep an eye out for that. Hopefully, you have a news feed and can listen in. The terms that they'll discuss, they're releasing open remarks at various conferences, and the terms they may share might indicate the direction of the Fed in addition to what Yellen shared earlier this week. So let's switch gears here and look at where we are. To start, in order to define where we are, we have to look at where we were and what we expected. This is yesterday's primary hypo. You can see the date on the video. The primary hypo, chop, chop, chop at the open. The market's expected to open against the close in value and range, and the expectation is for it to rotate higher towards 2033.75 being the point of control, and above there is 2043 as the key composite high volume node. This was hypo 1 yesterday. Hypo 2 was the opposite. In fact, I had those flipped, I think, when I was discussing them in the chat room. But Hypo 2 is chop on the open, having a hard time pushing through the 1819 area, and then likely to rotate down to 2750 and then continue lower to test 1995.50 again. Hypo 1 clearly 1 over. Hypo 1 this week did its job, I believe, once this week, and Hypo 2 took over 3 times this week so far. We'll see how today goes. But that's basically been the record so far. So Hypo 1 worked out pretty well. Not that it matters which hypo label it is, but it's just important to know what to look for when uh, when the market starts doing its thing. So here it is. We open, we drop a little bit, and then we take off. We get to our preliminary target of that 34.50 area. We fall back off and we push to 36.75, so we push through that by about 2 points. The next key area up is up here, and the high volume node is right here at 45.75. That's the next likely target area. Just to give you an idea of where we are in the big picture, since we need to keep the big picture in mind, here's where we are. So I know this looks like somebody bled on my screen, but this major profile is important. But let's hide this for a moment. See if I can hide it real quick. Let's just create a button for this and hide it. Sorry. Okay. Nope, can't do that. Okay, so I'm gonna get rid of it for now. Here's what's important. We dropped in the August through October area time frame into this low, this strong sell-off that we had during the fall of last year, and then we broke up and higher towards the all-time high, which is now at 2100 even on the current contract, price adjusted for roll. And we went to 93 quarter, we chopped around, and then we dropped off to retest this last low and got to 1795 on the adjusted prices. And here we are rolling over and pushing higher on this W formation right here. So we push lower, higher, low. There's your pivot, and off to the races we go. And it's actually this projected forward is about where we are currently. So that's a classic W pattern. But what's more important is that here's that 2015.75 that I've been talking about that the market just pushed through and fell off of day before yesterday, and then yesterday it opened at it, tested below, and continued higher. It's basically rejecting this area. But what's really important is that we are climbing into this high volume node now. And the high volume node has a point of control at 2063.75, and that is the key price above. Not only is it the high volume node for this MC, it is a high volume node on the composite as well. And it really, the market having pushed this high is really putting the shorts on their heels and squeezing a lot of shorts out. The trade yesterday seemed like it was a short squeeze more than anything, again, into expiration. And that's really taken a lot of people by surprise here. But overall, the market still remaining strong, and that is once we clear the LVN here at 2015, I can't draw a line, at 2015.75, then the most likely target from the auction, from the simple auction logic, the most likely target is the most accepted price in the region, and the magnet in this region is 2063.75, and that's where we're likely headed. Are we going to make it in a few bars just like that? Probably not. I expect that Monday we would have a rotation back down, pull back to the 2019-95 area, probably Monday, Tuesday. But this run up into expiration here has been fairly strong and fairly single-sided, so it's quite unusual. But what we've done, what's important here is what we've done is we've cleared this last composite HVN and are moving into the big one, and we're moving into the balance that we've had for eons. Look at this. Look at how we've traded this. This is last year from October of 2014 all the way to August of 2015. Just a huge balance zone that we were stuck in last year, and we fell off of in August, and that's basically where we are again. We are back. We are back, baby. And we're back into this upper distribution, and it is very, very likely that this market will get extended out and continue higher at this point. But first things first, we cannot predict that far out, at least not me. First things first, we need to look at the how it treats the MC point of control of the last balance zone that we were in, which is up here as outlined, and that's where things are, how things are shaking out. So if you're trading weekly options 2-3 weeks out, it gives you an outline of where things might be for you to select your direction and strike prices. So overall, yesterday, a fairly impulsive move up. A good, very, very decent range. Yesterday, 24.75 points. We had a very shallow pullback and a lower high into the close. We looked like we were in a corrective phase, which would have us expect um, uh, the overnight session to drop to the low volume node. So let's zoom into that a little bit. So given the impulse failure correction, the expectation is it would likely push to the low volume node overnight. It didn't quite get there. It stopped at 2027, which was actually the high of the prior session. Remember, 2020, the high was 2027 and a quarter, which was in line with the naked gap close here. From way back, I think it's December 31st. That was the close of last year. And the overnight session just pulled back by a tick to 2027 before it found its base and has been pushing highs or trading near highs in the overnight session. Very, very bullish action. So there it is. Chop around, drop to 2027, and then push up, and we have what looks like a weak high and a fairly bullish overnight session. The market's just not letting go of territory it has gained, that buyers have gained. A double distribution profile, but really it is more of a balanced box-shaped profile, and it's holding up here. So I would caution shorts again coming into the open. The expectation for the open today, to boil it all down, I'm almost out of time here. The expectation for today, we're opening in range, in value right now, up against the point of control. The expectation is if it opens up here, the magnet is likely to be the point of control at 32. If it holds above this low volume node at 26, then we are likely to get a choppy day, but overall the expectation is it's likely to chop around and push up. Again, chop is expected whenever we're opening in value and in range against a high volume node. We expect chop because that is balanced. That is an area where a large number of participants traded together, and that's what forms the high volume node. Otherwise, it wouldn't exist. So that's the primary expectation. The secondary expectation, again, test the 32.25. The market pushes higher, stalls, falls back in, reattempts that prior high at 36.75, and then starts to rotate down through that 2026 and push lower, and that's hypo 2 for today. I hope you, at this point, understand how these hypotheses are arrived at. It's very important. It's not about you showing up and just seeing, okay, what is hypo one, two, three, whatever. It's how do we get there? Because it requires adjustment throughout the day. It requires that you ask the key questions. What has it done? What is it trying to do? How good of a job is it doing in getting there? And all of those should result in an answer to the question of what is the most likely move in my time frame? What is the most likely next move in my time frame? And a lot of times people get confused because they're sitting there trading off of a 10-minute chart, listening to a guy who's trading off of a 1-minute chart, or vice versa. You have to define things down to your time frame. Otherwise, it gets very confusing. So if you're following someone in a chat room or whatever, if you're paying for a service, one of the first things you need to define and be clear about, without a doubt, is what is that person's time frame versus mine? Do I have the capacity to hold trades for as long as this person does? Otherwise, you're comparing apples to oranges, you're mixing bananas with, whatever. Uh, so it just doesn't make any sense. So make sure you know what your time frame is and make sure your plan is based on your time frame. My goal with these trader bites is to show you the logic behind arriving at those plans, and then I detail through AMAs and various other outlets how I'm actually executing on these, how I'm participating in the market based on these hypotheses. Okay, so that's how things are shaping up. Hopefully, you'll have a great Friday. I want to remind you again: do not uh, let your emotions go out of control today. It is not a good day to take a big loss and take it into the weekend. It just isn't the way to go, especially since here, at least in the northern hemisphere, the weather's getting a little bit better. You want to be happy and participating with your family rather than sulking in the corner because you blew away 30% of your account in one day because you got overzealous. Good luck, and I'll catch you on Monday. Take care.